Hi, good afternoon, everybody. Could you start, please, taking your seats?
Hello. Start pretty good right away. Okay. Good afternoon, everybody. Before we begin today's agenda, may I deal with the housekeeping preliminary by reminding all of you to switch off your mobile phones or put them on vibrating mode. Thank you. Good afternoon, Mr. C.Y. Leung, Dr. Anthony Neok, ladies and gentlemen. A very warm welcome to you all for making time to attend this second series of the hybrid seminar organized by APSA in 2023. I wish to begin by sharing with you APSA's vision to help build Hong Kong into a securitization financing hub. With the announcement by President Xi Jinping of the Belt and Road Initiative in 2013, APSA sensed that securitization would be an efficacious tool to raise the enormous funding required for infrastructure projects contemplated under the BRI. In 2016, I represented APSA at a major international forum organized by the Asian Institute of International Financial Law on enhancing Hong Kong's future as a leading international financial center, which was attended by financial and legal scholars from mainland China, Hong Kong, Taiwan, and Macau. The topic of my presentation was securitization in relation to infrastructure projects under the Belt and Road Initiative. The paper was well received at the conference. This gave the assurance that our initiative was on the right track. In 2018, Dr. Anthony Neok and I were in Beijing attending the annual conference organized by the China Securitization Forum. Noticing the rapid growth of the securitization market in the mainland, Tony and I discussed and agreed that it would be a good idea to hold a major conference in Hong Kong on the Belt and Road Initiative, infrastructure financing. We invited the Hong Kong Institute of Bankers to co-host the event with us. I think CEO Carrie is here. Carrie? Oh, she might have, yeah. Okay, so we co-host the event, and Tony, with his immense network and connections in the mainland, helped to secure some senior officials from the National Development Regulatory Commission, Sinosure, and the China Development Bank to speak at our conference in Hong Kong. The conference was well attended by members of the banking community, the legal, accounting, securities, and other related professionals who attended the conference, and if they were interested to learn more about securitization, which they found innovative and its development. The event represented an important milestone in APSA's endeavor to promote the development of securitization in Hong Kong. Now, in 2020, following the conference, APSA published a report titled Hong Kong, a securitization financing hub for infrastructure and small and medium enterprises, which can be viewed and downloaded from Google. This marks another major milestone in our endeavors to establish Hong Kong as a securitization center. These are the reports which you can download from our website and also from Google. Now, mainland securitization market. Following the publication report, we look at mainland's dynamic securitization market, which has been developed very rapidly in those years. And As of 31st December 2022, the total issuance size of mainland securitization was around 15.7 trillion RMB. Even though mainland China has been the second largest securitization market after the US, with annual issuance averaging $355 billion over the past 5 years, foreign capital accounted for only 3% of mainland's bond market, which showed that international participation in the mainland's bond market, including securitization, is extremely limited. Well, the importance of securitization in a country's GDP is demonstrated in the case of the US, where at the end of 2021, the US asset-backed securitization market was about $1.6 trillion, or about 6.8% of the US GDP. The US mortgage-backed securitization market was, however, even more impressive, with a total issuance amount of around 12.2 trillion, which accounted for about 52% of the US GDP. Now, the success of the securitization market in the US confirms that the US capital market provides a material proportion of financing to companies compared to the US banking system, making this capital market a valuable resource for business development. Now, I think in the interest of time, because of the we do have Mr. C.Y. Leung, going to deliver address. So I will not go into further about the benefits of securitization, but my panel members will do so. Now, just to say that, fast forward to where we are now. So we look at we explain what happened, how we came to this kind of initiative as, the Hong Kong development. And the thing to do is that right at this moment, okay, in order to move forward, what are the challenges that we need to face in order to build this bridge between the mainland and Hong Kong in order to, to connect the two? So we discussed and we discovered that what needs to be done, there are two prerequisite conditions that have to be satisfied. One is that Hong Kong has got to build itself an SPV regime. Unfortunately, there are some wrinkles in some of our major legislation which need to be fixed, okay? So that's one. The other thing is that to enhance the Bond Connect scheme so that, this SPV could be admitted. That's what we are trying to request as an approved investor, which at the moment, under the Bond Connect, all SPVs are not qualified approved investor. So those are the two hurdles that we need to overcome. With that, I would like to say that, we then, subsequent to that, we have been in contact with the government, explaining and liaising with them about the issues that need to be handled. At the same time, we have also been in touch with the mainland's officials about the issues and also to gauge their support, for our initiative. Okay. Now, in the case of liaising with the mainland government officials, I'm pleased to say that through the strong support extended to us by Mr. C.Y. Leung, Vice Chairman of the National Committee of the Chinese People's Political Consultative Conference and former Chief Executive of the HKSAR, we had made fairly extensive contacts with policy leaders and government officials from the mainland, including our visit to meet with the party secretary of Nansha district in Guangdong last year in July, the submission we made to the People's Government of Guangdong province in August 2021, and in particular to Mr. Han Zheng, the then Senior Vice Premier of the State Council in August of last year. And the invitation extended to me to represent APSA to speak at the forum co-hosted by the One Country, Two Systems Research Institute in January of this year. So in order to show appreciation, we have invited Mr. C.Y. Leung to grace this occasion by delivering a key message to us via Zoom today. Mr. Leung, please.
Thank you very much, Susie. I presume you can hear me. Susie, can you hear me?
Yes, I can hear you very well.
Thank you. Susie, Tony, ladies and gentlemen, good afternoon. I'm very pleased to join you at this hybrid webinar via Zoom. I just got back from Beijing and I was on the phone with Susie about the next step of this very meaningful, important project up on the central authorities level. Let me show you something. This file is 31-year-old. In 1992, 4 partners of KPMG, together with 91 other professionals and people in the business of making a stock market, trading in a stock market, were gathered in the Portman Hotel in Shanghai. And we were there with other experts from the mainland and from Taiwan. There were altogether 105 people from Taiwan and 90 altogether from Hong Kong. And the theme of the conference was Symposium on Securities Markets, Shanghai in 1992. 亚西亚两岸和香港证券交易与管理研讨会。And there was a first-time experts from the 3 parts of China got together. Interestingly, and this was a year before the H shares of Qingdao Brewery was listed in Hong Kong. The then Deputy Finance Secretary of China gave some opening remarks, and he said, amongst other things, that the total market capitalization at that time, this was 1992, was 6 billion renminbi. Now, we all know that the total market capitalization of the 2 major markets in the mainland China now, namely Shanghai and Shenzhen, is about 80 trillion renminbi. So that's basically a one indication of how fast the market in securities market in the mainland of China has grown in those 31 years. In 1992, before Qingdao Beer came to the Hong Kong stock market to be listed, and after the symposium, many Hong Kong delegates got together while in Shanghai, and we said to ourselves, can we really compete with the Taiwanese who spoke Putonghua much better than we do? We struggle with our Putonghua, and most of us had to speak in Cantonese with translators. What is the future for the Hong Kong stock market? And I have to say that most of us left Shanghai feeling rather sort of dejected and frustrated. Now, as we all know, we have won this competition versus not just Shanghai, but also not just Taiwan, but also other markets such as Singapore. Now, the point I want to make is this. If we look at this question of securitization, particularly of infrastructure projects on the mainland of China, there are many obstacles ahead, not easy, but these obstacles are no more difficult, in my view, in my experience, than the obstacles that we faced back in 1992 in trying to get a fair share of mainland enterprises listing outside of the mainland. So that's where we are. The first point I want to make is a point of encouragement to encourage everyone in the audience and everyone in the industry in Hong Kong to join hands and pool together. If one reads the 14th five-year plan published by the central authorities, there's one key sentence and two key words. And this is to support Hong Kong to elevate its status as an international financial center. 支持香港提升国际金融中心地位. So the two key words are one, international, and two, elevate. Now, by elevation, I believe the central authorities mean that we shouldn't just keep on doing more of the same thing, and we should go for the higher value addedness in the food chain. IPO on the stock market, great. We should do more of those. We should abandon that side of the business, but I think we should also do new things. And the second keyword is international, meaning while we know that the mainland is already doing securitization of infrastructure projects domestically, we want to extend that to cover the international markets. And this is where Hong Kong can play a unique role compared to other financial centers in the country, such as Shanghai and Shenzhen. So one is to elevate our status, and the other is to make use of our international connections to serve the country better as a financial center. And that's why in the past couple of years, COVID notwithstanding, I was able to work with Tony and Susie, trying to spread the gospel, as it were, on the various levels, on both the provincial level and the central authorities level in the country, and trying to get the attention of the key decision makers to use Hong Kong as such an international platform to do securitization, amongst other things, of infrastructure projects. So this is a piece of work in progress. I'm no expert, but what I can do is to sort of knock on doors and try to open doors and try to articulate in policy terms, not so much in professional technical terms, to the decision makers. And with those words, I'd like to sort of quickly summarize and say to all friends here in the audience, let's all work together. I think the prospects are promising. We've done some groundwork by now, and look to the support of everyone to make Hong Kong, in addition to a very useful stock market, in addition to being a very useful stock market, an equally useful market for securitized assets in the rest of the country. Thank you very much.
Thank you very much, Mr. Leong, for your inspiring and very encouraging remarks. We very much look forward to your continued support in assisting APSA, the financial sector, and related professional bodies in Hong Kong to establish Hong Kong as a securitization financing platform for mainland China and as a hub for this region and farther beyond the Middle East. Once again, thank you for honoring us with your key message delivered today.
Thank you.
Thank you. Now, next, I now wish to invite Dr. Anthony Neok, SC, JP, and Honorary Advisor to APSA to deliver a long-awaited speech for today's seminar. The title of his speech is Making Sense of the Financial Markets in a Changing World. Tony is a beloved doyen, not just in Hong Kong, in the Hong Kong community, but he's also well-respected and admired in mainland China. For people there will remember him as someone who told the former Premier Zhu Rongji in 1999 that he would only accept the invitation to become the chief advisor of the China Securities Regulatory Commission, which is to help deliver the mainland's bond market, on condition that he should be paid only $1 a year. A post, only thing. Post which Tony held for 5 years. So I guess he got $5. And, huh? $0, $0. And anyway, in his speech, Tony will explore the development of the world's financial order developed from the ashes of the Second World War to present day, and how monetary, regulatory, and financial theory concepts may develop in light of the changing geopolitical and technological landscape. Tony, will you please come up to the podium?
First of all, I'd like to thank Susie for inviting me, and also to thank CY for really spending time with us, because I know CY is a very busy guy. To have spent time with us is something I think we should cherish, and something which we should be very grateful for. Now, what I'd like to do today is a work in progress, as CY says. I'd like to then start off with my PPT, if I may. Okay, let me start with my PPT, if I may. Now, I got into the legal business in the early 80s. Then I became an attorney in San Francisco when I got into the finance business. So now I've been in the legal business and the finance business for about 40 years. And I'm trying to make sense of the whole thing. It's very, very difficult to make sense of the whole thing, particularly when you're in it. So bear with me. This is my attempt at trying to make sense. And it may make no sense at the end of the day. So let us try to start with. Now, first of all, please have this second one, because I cannot now use the this one. I cannot. Yeah, how do I use it? Yes. Yeah. Okay. Okay. Thank you. Thank you very much. Well, what I'd like to do is just really to try and put forward to you what the present financial international order is to us. Is very much, in fact, the legacy or what has happened immediately after the Second World War. What has happened is that around about 1941, very soon after Pearl Harbor, the only country which has the means to do this was the United States. In fact, everybody was in war. The United States, in fact, was not in war. And in one of the dungeons in Washington, D.C., there are plenty of dungeons there, incidentally, if you go there. These are the basements of all these buildings that you see. And they number the streets in DC, I Street, A Street, and so on and so forth. In one of these streets, in the dungeons of these buildings, there was a group of people who began to plan what would happen after the Second World War when the U.S. would have won the world. Now that was actually exactly their mandate, when the U.S. won the world. And what they've done really is what we have today, is the world order. And that world order pervades all of us. Now, I'd like to when you look at this PPT screen, is to deal with this order in this way. Is first of all, what is the order? Secondly, what has this done for all of us, for the world? And thirdly, I'd like to draw your attention to some dark facts within that. And I mean dark facts. Now, I don't use the word truth, because truth belongs to the realm of philosophy and theology. I use facts because facts could be proved by evidence. And this is what I propose to do. So what I hope to put before you is the evidence that really points to these dark facts. And we live with these dark facts today. And then, bearing in mind these dark facts, I'd like to then point you to the challenges that the world faces today. And these are the challenges that you see. And then, what are the possible solutions? And finally, what role can Hong Kong play in this? Now, first of all, then let me then begin to deal with what is the order. Could I have the next one, please? I don't know how to do this, unfortunately. Oh, I can do this. Okay. Now, the order is this, is that right after the Second World War, there are a number of important institutions which was created ostensibly by a meeting of the leaders of the world. But it all happened in the US. To give you an example, the United Nations started in San Francisco in 1945, which is the San Francisco Conference. The World Bank and the IMF started, in fact, in Bretton Woods, in fact, somewhere in New Hampshire, in the United States. And the GATT, actually, well, the GATT is the only thing which didn't happen here. It happened in Geneva, basically. There's a meeting was in Geneva at the time. And the idea was to form a World Trade Organization. It didn't happen, basically. But what has happened was that there was an international convention, which was called the General Agreement on Trade and Tariffs, which was drafted by the Americans, incidentally. And in fact, the Articles of Association and the Constitution of World Bank, as well as the Constitution of the United Nations, all drafted by the Americans, incidentally, because they had the resource to do it. But what has happened is that in relation to the World Bank and the IMF, the hidden fact and the dark fact behind it was that the World Bank, in fact, has shareholders, in fact. And the shareholders, and in fact, depends, in fact, on how much money you put into your shares. And in fact, the United States was the country that had the money. Nobody else had money at the time. So they were the major shareholder. And to this day, basically, they are the major shareholder of that. Now, the IMF, the Articles of Agreement of the IMF, again, was drafted by, although John Maynard Keynes, the British delegate, in fact, was really the proponent for the rest of the world. And he suggested, in fact, that, well, we should have a world currency. He called this the Bancor, basically, at the time. But the Americans then said, you know, the American Treasury Secretary was then saying, not on your life, you know, we're going to have the US dollar as the world currency. And the reason why the US dollar was the world currency was that around in 1935, Franklin Delano Roosevelt said to the world that any central bank who would give me 35 US dollars, I would give you 1 ounce of found gold, basically. And that was the so-called gold standard. And that was the reason why the US then said, you know, you must have the US dollar as the world currency, the world reserve currency, because, you know, we're backed by gold, basically. Now, but again, there's another dark truth in that, or the dark fact in the IMF. The IMF, in fact, is that all the countries become members of the IMF, but in fact, if you want the IMF to help you, you have to make some drawings from a thing called a special drawings right. Now, the special drawing right, basically, how much can you draw? That's the question. The question then is this, is that whatever you can draw is a ratio of your GDP. Just think, you know, if you are Kenya, if you are Somalia, and what is your GDP? It's next to nothing, basically. And therefore, really, therefore, they got minuscule SDR. So this is the dark truth, which is why the country that has the most money and the biggest GDP, of course, the US, right? So that's why, in fact, the US has the greatest amount of GDR. Now then, the next question is this, is that, well, in that case, what would happen to the world because of that? The next question then is trade. Now, the only meeting on the international front, which didn't take place in the US, was the General Agreement on Trade and Tariffs. Now that has actually helped the world. And let me now come to the next one. Well, what is, in fact, the question? Could I have the next one, please? The next, yes. Well, the next thing is this, is that you got the World Bank, you got the IMF. Now, these are the institutions which are going to help the world, in fact, come back from the ravages of the war and reconstruct and build a better world. That's what they do. But then what principles do you use to build a better world? Well, first of all, there's already the dark secret, which is if you want a World Bank, well, basically, who's the boss in the World Bank? It's the guy with the largest shares. Who's the boss in the IMF? Is the guy with the largest amount of GDP, basically. So who calls the shots? And who then decides on who gets what? And if you get what, how do you do it? That's the next question. Now, in fact, this term called the Washington Consensus, this term was devised in the 1980s by an economist. But in fact, it started from the very beginning, these principles. These principles, if you look at them, are the principles of liberal capitalism, essentially. free markets, balanced budgets, and so on. Just think in terms, if you are a developing country, you got very little money. Nobody wants to pay tax, basically. Who has money to pay tax to you, right? Then what do, basically? Well, you have to run a deficit budget. If you run a deficit budget, because, you run a deficit budget, you have to borrow some money, basically, so that you can develop your country. But the problem is, who the hell would lend you money, basically? Nobody would lend you money if you're Nigeria, if you're Tanzania, and so on. Because, you have no credit, basically. So because of all of this, the IMF will say, okay, we'll lend you some money, but you must balance your national budget. You must, in fact, tax reform, and so on and so forth. In other words, that is a policy of austerity, basically, which is why, really, from the Second World War up to very, very recent times, in fact, right after the Asian financial crisis, in fact, when Indonesia asked the IMF to help, I don't know whether you remember, I still remember, I was chair of the SFC and also chair of IOSCO at the time. So we went to Indonesia to witness one thing. It's Monsieur Kamdasyu, who is actually the Director General of the IMF. And President Suharto was there. He was signing, in fact, an agreement with the IMF. And Mr. Kamdasyu, looking at this, he was holding his hands like this, looking at President Suharto like this, Now that means, that the IMF is dictating. And what has happened in those agreements? That Indonesia must balance its budget, it must reform tax, it must do all sorts of things with tax, with trade restrictions, it must open its capital markets, and so on and so forth. Now, all of these things, a developing market can ill afford to do, but then they were asked to do it. But if they don't do it, they get no money from the IMF. And that was the problem. That was the dark fact, in fact, which came with, in fact, all of these institutions after the Second World War. Let me go to the next one then. Well, what about trade then? Trade has actually helped, in fact. And could I have the next one, please? Now trade has helped because there is growth, but there are issues. Let us look at the growth. I will try to use this. Okay, let us look at the growth. Now, in terms of the growth, the World Trade Organization has done quite a lot. It became, of course, the World Trade Organization in the late 1990s, but it has done a great deal for the world. Let me look at what has happened in the world. You look at the growth of trade around the world. This is phenomenal. In fact, it has helped all of us, in fact. So the WTO has actually been of great help to the world. You look at this, again, if you look at this in the broad sweep of history, from the 15th century, 16th century, right up to now, in fact, the beginning, the blossoming of trade, of international trade, began in the 1950s, if you look at this. And of course, it accelerated after the World Trade Organization because, in fact, all the tariffs went down. And as a result of that, we have problems. Now, why is there a problem because of that? The problem is this, is that the US dollar has become the world's reserve currency. Because it is the world's reserve currency, everybody buys stuff using US dollars, basically. So the US dollar, the US then buys stuff from China, from various countries. The US dollar goes out of the US. It goes out of the US as a result, in fact, it runs, in fact, always a current account and a balance of payments deficit, basically. And President Trump says, oh, this is not on, we don't want this deficit. But that is, in fact, the problem with being the world's reserve currency. That if you are the world's reserve currency, you have to run a balance of payments deficit, which is why we see the deficit as structural deficit, in fact, in the US, all the way from the 1950s and the 2000 right up to now, the US balance of payments always in deficit. But in China, because we are a net exporting country, even though we use the US dollar a lot in our import and export, we have always run a current account surplus. And the US says, you guys run a surplus, so therefore really you should buy more stuff from us. If you don't buy more stuff from us, we're going to put tariffs on you. And that is what is happening. And you find, for example, Russia always runs a surplus, in fact, because Russia, one of the world's exporting countries in terms of agricultural product, as well as energy. And as a result, of course, they always run a surplus. Why? Because they use US dollars, basically. And so that's the reason why they have a surplus. We find the Russian always have a current account surplus. The EU also has a surplus. Why? Because they sell these Mercedes and stuff to the US, basically. And that's why they have a surplus. And that's why the US is always at sort of so-called war, in fact, with the countries that run surpluses, because they have a deficit. But they do not know that, in fact, no, what they have done is that the US dollar from 1974 has been a fiat currency. Now, if you look at the US dollar says, no, the US Treasury promises to pay in this amount to you. So if it's a $1 note, they pay you $1 in US dollars, okay? So trust us, they say. And then you ask them, who do you trust? Very simple. You look at a US dollar note. It says, in God we trust. Very simple, right? Okay. Now, therefore, they trust in God, basically. Okay. Now, that is the problem, essentially, with the US dollar. Exactly. You look at that, you see? Look at that. In God we trust, you see? In God we trust. Right? Now, you have the US dollar. Okay. Now, that's the reason why we have essentially this so-called dark fact, is that the US does not want, in fact, to run a deficit. But at the same time, because they are the world's currency, they have to run a deficit. This is the thing called, which an economist called the Triffin dilemma. You cannot have your cake and eat it, but they want to have their cake and eat it. This is the problem. Now, the reason why they want to have the cake and eat it is very simple. Because if China sells goods to the US, if you are China, what you do is that you work your butt off, basically, in order to produce the stuff. You sell it to the US, they print you some US dollar notes. That's it. And then you get these notes, and what do you do with the notes? Well, you invest this in the US capital markets. And essentially, so they get the best of both worlds. Now, I'm not telling this to you for the first time, basically. You hear this from a lot of people. You hear from Jeffrey Sachs, for example. But that is the truth. Now, then you go on to the next situation, that because many countries has gone up the supply chain, what we have in the world today, essentially, is that everybody, a lot of people, particularly the countries who've gone up in the world, are producing intermediate goods. In other words, in addition to the raw goods that they have, they produce stuff which for the next stage, you just need a bit of packaging and so on and so forth and so on, which is why the industrial base has gone up a great deal. Now, China is one of those places. And this is why the world is so connected in terms of trade, because all the relatively advanced industrial countries, in addition to primary agricultural goods and so on, what they manufacture is actually generally intermediate goods, not just sort of primary goods, which is why the US is losing out in a sense, because a lot of the intermediate goods, in fact, are actually done by American capital throughout the world. You look at China, for example, a lot of our exports to the US are not just Chinese companies, they're joint ventures with American companies. And in fact, the Americans, in fact, they are saying on the one hand that everybody's taking our jobs, but actually it is the capitalists which have moved the money out and taking the jobs of the people in the America. So that's why we have, therefore, a supply chain itself, which is so important and which has, of course, suffered as a result of COVID-19. Let us then go to the next one. It is no longer working. Yeah. And of course, China is the world's biggest exporter to the US right now, the world's biggest exporter. Now, the next two, in fact, very interesting, Mexico and Canada are the next big ones. Now, why? Because they have a free trade agreement. The US has a free trade agreement with Mexico and Canada. This is called NAFTA, the North American Free Trade Agreement. Now, and then Japan and Germany, Japan has always been taken down by the US because they have run very, very large surplus. So has Germany. So those are the two countries always in the sights of the US trade representative. Let me then go to the next one. Then, of course, the reason why international trade has gone down is that, tariff has gone down a lot. You can see tariff has gone down a lot. However, if you look at China and the US, the tariffs have now gone to near 50%, near 50%. which is why we see, Yellen, Blinken, and so on saying that this has gone too far, that we have to do something about it. Otherwise, if you look at the rest of the world, it's like 3%, 4%. Now we're talking about 50% in China, which is ridiculous, basically. So which is why, something's got to be done. Then the major economies, of course, have very low tariffs, as you can see. So China has got very, very high tariffs, which you cannot do. Now then let me then go to the next one then. I don't know how to use this now. This is a problem. I'm so sorry about this. Okay. Okay. Now the capital markets, of course, have also grown. And as we all know, I'm going to pass through this very quickly now. And we can see that basically, the capital markets in Asia and the US have now gone beyond 100% of the GDP. They're roughly the same height as far as the advanced economies and so on, but that's because the advanced economy is much larger GDP, basically. That's the reason why. And as a result, the stock markets have really gone up a great deal in all of these countries, in China and so on. The bond market has also gone up. As far as the bond market is concerned, the US has the largest bond market in the world, but China is not too far behind. Actually, the US has 51 trillion in terms of bond market, which includes a large part is their government bond. And China has 21 trillion. So this is the second largest bond market, which is why you guys are talking about securitization, because that is, in fact, the next most important thing. If you look at the kind of bonds around the world, you'll find that the US, in fact, has by far the largest, in fact, government bonds in all of this. So a lot of the bond market is the treasury, essentially. Now, which in fact is the second dark truth that I will take you to. But then most of the bond markets around the world are onshore markets. There's very, very little in terms of offshore markets, in terms of bonds, which is why Bond Connect is so important in Hong Kong. Then you find financial assets held by banks. The UK is in very, very bad position because 600%, their bank assets is 600% of their GDP. So if the banks just go down a bit, their GDP is in trouble, essentially. China has about 336 trillion of bank debt. However, that's about 3 times, 300% of GDP. So not too bad, basically. Then, of course, we found about the rise of financial markets around the world. Now, you talk about international financial centers. But then actually now there is a difference between international financial centers and cross-border financial centers. Those are two differences. Just remind yourself of that. The reason is this. If you look at, in fact, international financial centers, you find, in fact, that cluster around the left-hand side of this is like China, like Great Britain, like Switzerland, the US, and so on. When you look at the right-hand side of it, which is on top, which is a lot of money, basically on top is what? Is Cayman and the BVI. Now, a lot of money, in fact, goes through these cross-border centers. Actually, I only found this out very recently because I thought that, those are not important jurisdictions, but they are very important jurisdictions. There's a lot of money crosses the books in these places. And you'll find, in fact, that the reason why this is so is that they have no tax. That's number one. The second question is that, they don't look at anti-money laundering and terrorist financing, all that strictly, basically. And as a result, people like them, they put money through them, basically. You guys, Mr. Madoff, of course, puts a lot of money through them, basically. And the people in FTX put a lot of money through them, basically. So which is why we now have this question of cross-border financial centers. Just remember that term. We are international financial center because we observe the rules. The cross-border financial centers, they're big booking centers. And which is why a lot of PE like them, because, they don't want to put too fine a point on the people who invest in them. These are the centers that have to be looked at in the future. Then you'll find, of course, they are doing very well in terms of the financial centers around the world. And what stuff do they have? They have FDI, they have debt portfolios, they have equity portfolios, all kinds of investments, in fact, are booked through them. Now, then finally, well, what is the world today? Well, the world today actually is a very, very unequal place. Look at this. most of the wealth of the world is actually in North America and Europe. You know, more than half is like 60% of the money is in Europe. If you look at, in fact, poverty around the world, in fact, there's still a very large number of people, 30% of the population of Sub-Saharan. In fact, they live on less than $15 a day. Look at the next thing. 45%, look at 2000, 45% of the wealth of the world is owned by 1% of the people in the world. And therefore, you'll find, in fact, a lot of, which is why we find Mr. Karl Marx coming back, basically. Now, and Mr. Karl Marx comes back because of this. I would recommend that you go to London, you go to Highgate Cemetery and pay a visit to the grave of Karl Marx. And the important thing that he says in Karl Marx is this: the point is not to talk about the world. The point is to change it. And which is why we're finding, in fact, a lot of populism, a lot of socialism around the world. Then we have the problem of currencies. Let me come down very quickly on the currency. One of the big problems about currency, because now we are now all on fiat currencies around the world. Since 1974, we are all on fiat currencies. So every country that issues the dollar or whatever amount of currency says, trust me, basically. That's it. And because of that, you cannot have your cake and eat it. Now, this is in fact called the monetary policy trilemma. You cannot have all three. You cannot have free movement of capital. You cannot have exchange rate management. You cannot have monetary autonomy all at the same time. Now, which is why the US doesn't manage its currency, basically. But because it is the world's currency, it doesn't care, basically. It doesn't have to manage it. But every country has to do it, basically. And that is the reason why we have a big problem in terms of the US, which has increased a lot of its money supply. You can see this. Now, the reserve currency has dropped down, in fact, to 58% around the world in the US. The other big problem is actually fiscal policy in the US. And you will find, in terms of fiscal policy, a structural diversion between spending and revenues. They never catch up, essentially. And as a result of this, we have the next problem of the US, in fact, spending far more than it can actually get. And because of that, and the US having, therefore, to issue more debt. And if they issue more debt, they have to print more money. If they have to print more money, they have to pay more interest. And as a result, you'll find, in fact, a situation where the US will have less and less money to deal with its discretionary spending. Now, a lot of the discretionary spending is actually defense right now. Because if you look at the defense budget of the US, you'll find, in fact, the defense budget is very high. Another problem in the US is actually a very aging population, as has the world. And therefore, really, what we're talking about now is that you see the defense budget is very high. The US defense budget is the same as budget of 10 countries put together, including China right now. The US has close to 800 bases around the world. In fact, China has only 3 at the moment. Now, and therefore, really, we have a very, very difficult situation when, in fact, now 33% of the US bonds are held by the rest of the world. It used to be very small. In the 1970s, it used to be 5%. You know, the US people hold its own debt, but now 33% is held by the rest of the world. If people begin to sell, if there is, in fact, some kind of problem with the US dollar and some kind of stampede, we are in a world meltdown situation. And as a result of that, another dark fact is this, is that a lot of Asia is held hostage by the US dollar. Why? If you look at this map, for example, you look at this chart, South Korea, 35% of the debt is issued in US dollars. The reason is this, is that, you know, people don't trust your local currency. So if you want to do debt around the world, you have to issue debt in a currency that people trust. And as a result, they issue a lot of US debt. The problem then is this: how do you get out of it? You don't get out of it, basically. It is worse if you look at Argentina. 70% of their debt is issued in US dollars. They never get out of it, in fact. And that is the result why they have to be weaned of the US dollar. If they are weaned of the US dollar at the end of the day, then really what needs to be done is to see how the renminbi, in fact, has risen. If you look at the renminbi itself, but then of course we have climate change. I'll ask you to look at the IPCC report. We don't have time to deal with that, but China is on the rise because of the BRI in there. Because of course then because of that, we have a great commitment, in fact, to green finance right now, which again requires securitization, incidentally. And of course, we now have close to 20% of the world GDP. And of course, our GDP will increase. It is, in fact, targeted to increase by 8.1% on average up to 2026. And of course, right now, digital payment is all the rage in China. In fact, I chair the risk committee of ICBC. 95% of our daily transactions is in mobile transactions. So which is why it's very, very high penetration of that. And of course, overseas funds own a lot of our assets. And of course, we are now quite a big part of the SDR. And as a result of that, our money supply has increased, but not as steeply as the US. We have a program for decarbonization, but we do have a problem in terms of aging population, but not as badly as, in fact, the US. In fact, so we do have that. And then, of course, if you look at the CIPS, which is CIPS, which is the International Payment System, it is now going up a lot. In fact, there are now 36 shareholders of the CIPS. So which is why renminbi, in fact, could become an important international currency. And we have, of course, a very high human development standard in China, and inflation is very low. If you look at the UK, inflation is 10%, 11%, the US is 6%. China has kept it up to 2.3%, which is why, you know, with economic expansion, with relatively low inflation, we have a much better chance, in fact, of coming back. But of course, the Western world don't like us, basically, and which is why you have a very, very bad press, in fact, and you see that in there. So what do we do in the future? Well, what we do in the future basically is actually very much in the 20th Party Congress report, and I would encourage you to read that. One of the upshots of that is, in fact, a recent law on foreign relations by the National People's Congress, and that law essentially says this: we as a country will respect every other country. And what we always do is to find a win-win solution for everybody. We do not want a zero-sum game right now. And that is, in fact, our national policy. There are, of course, a lot of worries around the world. Well, who doesn't, basically? But then, you know, finally, then there is, of course, a very big international regulatory agenda, which I won't take you through. There is, of course, digital products, which is something that we all have to deal with. And but then, you know, all the four tigers, including Hong Kong, is going up. So I'd like to finally just say a few words on Hong Kong's role on this. In my 40 years in the legal business and in the finance business, basically, and working in public service, that I have found that Hong Kong has one of the best soft infrastructures in the country, and possibly in the whole world, in fact. Because of a number of things, because of our consistent professionalism. Now, professionalism has to be consistent. There's no flesh in the pan. It's got to be there always, basically, which is why we have a legal and regulatory system and a system of administration which has been consistent throughout, which is why we have the best soft infrastructure in China and in the whole world. The 20th Party Congress is an important blueprint that we could take part in, and I would encourage you to read it carefully. So therefore, what we need is really to put this all into practice so that we could help to innovate our nation, we become a great global citizen, and we create a win-win solution for ourselves, our country, and the world. Thank you.
Tony, thank you very much, for a very far-sighted and thought-provoking speech. The issues raised in your speech has given us much food for thought. And going forward, we will no doubt reflect on your pearls of wisdom to guide us in deciding how best to navigate our future and our destiny amidst the choppy waters of the current turbulent political climate. Thank you, Tony. Right. So we will now come to our panel discussion, and the panel session is on mainland China's cross-border securitization and Hong Kong as a securitization financing hub. Now, may I just call upon my panel members to come forward to the podium, and there are 4 of them today. The topic of discussion today, as I just mentioned, is the cross-border and the financing hub. And so whilst they are trying to get seated in order to gain time, on my left is Kaisen, APSA Director. Sorry. On my left is James Patley, Chief Legal Officer, Olier. And then at the third one, the Guilo, he is John Timpany, Head of Tax, Hong Kong, KPMG. And at the far left is a special guest panelist today, and he is Dr. Chen Jian. Chen Jian is the Chief Investment Officer of Chilean Renewables Group, and also a practice professor of finance at Fudan University. He happens to be in Hong Kong this time, and because of what we are doing is the platform, but we have a platform is like a dumpling. You have the wrapping, but you need some ingredients to go inside. And the very delicious ingredient is going to be the renewable energy financing, because they comes in, big numbers, and also is politically correct. And not only that, is something that we all yearn for. So I will start now. Now, in the interest of time, I will put 2 questions to each of our panel members, and I will deal with Jian, at the very end, because this is a little special, right? So the first question I would like to put to is James on my left. Now, James, how would a Hong Kong SPV regime complement Hong Kong's role as an international financial center? That's my first question to you.
Sure. Thank you very much, Susie. And one of the things I always like to think about when we're thinking of setting up SPVs, and particularly setting up new SPV regimes, is to look at what's being done elsewhere. And if you compare what we have in Asia to what you see in other places, Europe is a very good example. Over in Europe, there are 2 very big SPV jurisdictions. One is Ireland and the other one is Luxembourg. And if you look at these 2 cities, or these 2 countries and their GDP, and you compare it to the GDP of Europe, the GDP of Ireland and Luxembourg is around 4.5% of the GDP of the Euro area. If you look at the amount of securitization that is done in the Euro area, 45% of all European securitization is done through Ireland and Luxembourg. So they're hitting 10 times above their weight in terms of securitization. They both have very creative, very specialized securitization regimes for doing securitization there. And because they have those, even though they have only a small share of GDP, they're really hitting above their weight in terms of their being securitization powerhouses. If you think about Asia and you think about what can actually make a successful international securitization hub, a lot of what you need is already here in Hong Kong. And Tony was talking about a lot of these things earlier. You've got a strong bank presence, you've got a strong capital market, you've got a strong asset management sector. You've got these things, particularly a legal system, the common law legal system, which underpins a lot of international finance, is all here in Hong Kong. However, in terms of trying to bring all of this together, connecting all of this for the purpose of securitization, it doesn't do it at the moment. There's still quite a long way to go on that. But more broadly around Asia, no one has been able to do this yet. We do have some domestic regimes around Asia, which are working fine domestically. China, South Korea has one as well. But in terms of being able to have an international outreach, having an international center where securitization from around the region can be done, no one else has done it yet. But because of all these things Hong Kong has, Hong Kong is going to be a very capable center for doing that. And I think there's a lot of opportunity there, Susie.
I just want to supplement slightly what James referred to. He refers to Ireland, okay? From what we look at, according to statistics, more than 3,000 local SPVs are located in Ireland, and they manage more than 1 trillion euro of assets. And then the SPV sector has created more than 3,900 local jobs and contributed an estimated 500 million euros to the Irish economy. So I just want to point out that, what James says is absolutely correct. If you look around at some of the more developed economies in the West, they're doing very well. And we should have a good look at them to see if we could do likewise. We have all the infrastructures, as Tony say, very good, legal system, one country, two systems and all that. Okay, then let me go to the next question again to James, okay? What examples are there of regimes in other regions? Have they been successful? I'm thinking, in fact, of neighbor Singapore.
Yeah, so Singapore does have a securitization regime.
They're doing well.
Yeah, they do. Comparing that to what you get in places like Ireland and Luxembourg, the Singapore one's actually fairly limited. It's quite difficult if you try and do anything other than a publicly listed bond. It's quite difficult if you want to do anything on a small scale as well. You really have to do it you make a big splash if you want to be able to do something in Singapore, which is why there've been relatively few securitizations there to date, because it's just so difficult to fit within their regime. Compare that to what you have in Ireland and Luxembourg. They have a lot of flexibility. All different kinds of companies can do securitization there. You can do it in loan format, you can do it in note format, you can list it, you don't need to list it, you can clear it, you don't need to clear it. They have a huge amount of flexibility. And that, I think, is one of the reasons why places like Ireland and Luxembourg have been so successful as these kind of securitization, these international securitization hubs.
Right, okay. Right, okay, thank you, James. The next one, I like to put my question to Kaisen. Now, Kaisen, can you give some examples of the types of transactions and opportunities available to Hong Kong as a cross-border hub for securitization financing?
Sure. There are two types of opportunities, those not related to mainland China and those related to mainland China. I'll start off with those not related to mainland China. In May this year, the Hong Kong Mortgage Corporation completed its first infrastructure loan securitization. The transaction packaged a number of project and infrastructure loans initially granted by commercial banks to finance project and infrastructure projects around the world. And this case is a very good illustration of what Hong Kong as a financing hub could do, connecting global investors with, loan exposures around the world. And with the world very much focused on transition to clean energy, we're going to see more and more of these. However, this is not the only type of opportunities if we're talking about external to China. Earlier this year, we also witnessed the collapse of a number of very large banks in the US and in Europe. What that tells us is if a bank is running significant asset and liability mismatch, if you are forced to refinance in a period of market volatility, you may get into trouble. So after that, the regulators and the banks around the world are again putting on the thinking hat and say, how could I address this risk better? And again, securitization comes in because for most types of securitizations transactions, assets and liabilities have to be matched within the structure. And by doing that, you're also helping the bank who put those transactions to help that risk on their balance sheet. So on this point, we understand that actually a number of banks globally, as well as in Asia Pacific, and also including Hong Kong, are actually looking seriously into this.
Thank you, Kaisen. Just at this point, I'd like to invite James, to give a very simple but very practical explanation on securitization, because I think most of you, or quite a lot of you, do follow securitization, but some of you may not. So maybe James, just your very simple and practical definition?
Yeah, sure. One of the big problems people in the securitization industry sometimes have is that every country has its own definition of securitization, and quite often multiple regulators within a country all have their own definitions of what securitization is. So it means a whole range of different things to different people. And you can have something that is a European securitization, but not a US securitization. And it gets quite confusing sometimes. What I tend to think of in terms of securitization is I think about it all in the context of cash flows. What securitization is just doing things with cash flows. Cash flows from any kind of financial assets. And the things we do with them tend to be three things. We pull those cash flows together, we isolate those cash flows, and we channel those cash flows to some kind of investors. And when people talk about securitization, I usually think about it in the context of those three things. So pooling. Maybe you pull together cash flows from 5,000 mortgages into one big cumulative cash flow. Maybe you pull together cash flows from 25 infrastructure loans into one big cash flow. Those types of cash flows have very different features. The fact we pool them together gives them a very different effect to just looking at an individual loan. So this pooling concept is the first thing. With isolating, the second thing that I was mentioning, this is all about trying to isolate the cash flow that we want from any kind of risks surrounding it. And usually the main risk people think about is insolvency risk. If party X or party Y goes insolvent, will it mess up my cash flow that I'm expecting to receive? Will the cash get lost in some insolvency proceeding somewhere? So when we do securitization, we care a lot about isolating these cash flows. The third one, channeling, is all about channeling this cash flow to some investor. And there's a huge amount of flexibility here. We might channel it in a note form, we might channel it in a loan form, a certificate. It can be senior, it can be junior, it can be mezzanine. There's a lot of flexibility there. But a securitization transaction almost invariably involves some kind of channeling. So these three things around cash flows is how I would describe securitization.
That's very good. That's one thing is that, James refers to cash flow. In other words, there needs to be a stream of income. Just to share with this point, back in 1997, you heard of, I think, some of us who are here around our age, Tony, would have heard of David Bowie. And in 1997, what he did was that he securitized his intellectual property rights of his record. What he did was he securitized it so that he could buy back about 25 records from Sony then. So in other words, even records are securitizable, if that's such a word, okay? So it's very, very flexible. It's very easy, so long as there's a stream of income, okay? There's a greater economy. Just look at the United States, I mentioned earlier, they did it and they make good use of it to improve and promote the GDP. So there is real money and there is real money getting to the economy. Now, on this point, okay, talking about real money, the structure, the type of securitization that Hong Kong, could have in the future, right? I'd like to put a question to John, okay? When you talk about securitization, okay, one of the things that we should try to avoid or make sure that, you get is tax neutrality. It's got to be tax neutral. So in other words, James mentioned about this SPV, okay? SPV, he also talked about, isolation. Isolation also synonymous of, you can link it with bankruptcy remote, okay? So these are the concept you have to think. In other words, basically, it's just a structural thing. Right, so in other words, when you receive the income from the originator, it really, on the other hand, it passes to the investors. So what to do is that you should make sure that the tax is not imposed on all the income received by the SPV. Otherwise, there's a lot to pay. In most of the securitization jurisdictions, you will find that some of them do adopt, very clear securitization laws, okay? Just saying that income, rather tax is acceptable only on the retained profits, nothing else. And there's very, very little. So at the end of the day, even though you may be accepting billions, quite a lot of money on one hand from the originators. By the time you give it out, whatever little that is remaining, then you tax on it, okay? But I think in the case of Hong Kong, there may be a little difference. So I'd like, John to comment on that.
Oh, thanks, Susie. The tax guilo is here. So you're absolutely right. I mean, the principle in taxation is you want to have symmetry, and in tax, with securitization, we can achieve that in two ways. One, we exempt the income, and then I don't care about any deductions when I'm paying out to investors. And I think about securitization a bit in the same way I think about funds. It's just a pooling vehicle to allow investors to gain access to a greater range of investment opportunities. And we've always said, look, we don't tax collective investment vehicles. Why should we tax something that is effectively a collective investment vehicle? So that is one option. The other option is obviously allowing a deduction for what you pay out. And there are ways we can make securitization work currently in Hong Kong. Particularly if you issue a debt instrument and it's publicly listed, you can have a deduction, but it's quite complex, takes a long time, and invariably to get, the other key principle of taxation is certainty. You often have to go for a ruling with the IRD, and that's going to take somewhere between 3 to 6 months, probably as a minimum. And if it's a new product, dare I say it, it's at least 6 months. So it's that time to market, which again creates issues. A lot of what we've done, we do have what I'll call semi-securitization regimes already. We've got a ship financing regime. That's a form of securitization. We've got an aircraft leasing regime. It's a form, but these are very complex regimes. And while that's good for me, and I get to charge lots of fees giving advice, it's actually not good for the industry where you really want something that's got certainty and people can read the rules. They know how the rules are going to apply. There isn't going to be a big debate later about how it all works. And then we can move forward very quickly. So those basic principles of taxation, and tax shouldn't be a big issue here. But invariably it has in fact become a big issue.
I don't know whether you follow what I said earlier when I made the introduction at the beginning of the seminar, that we are looking at how to turn Hong Kong into a securitization hub. In order to be a hub, you need to have certain conditions satisfied. You need to make sure that there's tax neutral. You make sure that. Now, one thing I don't know if you're aware that very few banks, even for securitization transactions, do people use a Hong Kong company. And the reason why for so many years, Hong Kong incorporated companies are not used as SPV because of certain, I like to use the word wrinkles, but it's a little bit more than that, in the provisions of those legislation. Now, James is well versed in that because in our submission to the financial secretary, we did point out that if Hong Kong is going to be a hub, then you need to get some of the prerequisite conditions right. James, could you like to share what are some of the wrinkles that we find that stop us, from using Hong Kong as an SPV in the structuring?
Yeah, sure. Thanks, Susie. And I think the tax point that John's just been discussing is obviously the very key one. Being tax neutral is very key, but there are a handful of other points that can cause issues for Hong Kong SPVs as well. Three particular ones which you come across. One in Hong Kong is the money lending ordinance. The second one is the securities and futures ordinance around collective investment schemes and dealing in securities with that one, and trust licensing as well. A very common feature of securitizations under common law is having trusts in place. And the question is always, do I need some kind of trust license here? And SPVs are effectively meant to be structural shells. They're structural features of a transaction. They have no real brain. They don't have people making decisions. They're purely structural features. And when you look at these ancillary pieces of legislation, there's always ifs and buts and shoulds. Like, is this something I can really do under that bit of legislation? It's very gray, or quite often you probably actually do fall within that definition. So it's more of a no. Coming back to what John was saying, certainty. Certainty is something that's always needed to make things happen, particularly with structured finance transactions, securitizations, where we want to make sure these cash flows we're dealing with get very neatly, without interruption from where they're coming from to the investor. We want certainty. If we say, oh, it should be tax neutral, you shouldn't need a money lender license, oh, you shouldn't need a trust license, oh, it shouldn't be a collective investment scheme. Too many shoulds make it feel very, very unstable. And that's where the enemy is really around these kind of things. We want certainty, and we need to make various clarifications or adjustments to make sure we can get that certainty we need to make sure these deals can be done.
Okay, now, I think it was Kaisen. Kaisen, you mentioned just now that I think at end of May, the Hong Kong Mortgage Corporation, it issued this infrastructure loan of about $404 million, a very sizable deal. It covers about something like 20 over countries and projects, very similar to the Clifford Capital infrastructure in Singapore. Now, the question I want to put to my panel is this, because in our submission to the government, we say that, wait, if you want to turn Hong Kong, establish Hong Kong as a securitization hub, you need to get certain basics right. Namely, first of all, you have to tweak your pieces of legislation, the ones that referred to by James and John, okay? It's not that they are terrible about them, it's nothing. It's just that they are very outdated, kind of old legislation. If you look at some of the provisions, they never intended to cater for structured transactions like securitization. So therefore, it is quite understandable if the lawyers and the accountants here, when you ask them to issue a clean legal opinion, they scratch their head and say, wait a minute, not quite sure whether the Inland Revenue is going to assess all the income received. So because of that doubts, in the past, anyone that's going to do any securitization or structured financing, they don't even have to think twice. They go to BVI, they go to Cayman and do it, okay? And that's simple, that's very easy, okay? But of course, if we're going to develop Hong Kong securitization hub, I think the intention must be that, we should a Hong Kong SPV, okay? So what I want to put it to the panel is that why it seems that in the case of the HKMC transaction, HKMC was able to use a Hong Kong incorporated company as the SPV. So to that end, have we got it right? Were we asking, being too cautious in asking the government to tweak that?
I'll go as an ex-banker. A client comes to me, you're mandated, go and do a deal. I want to close it before the next banker steals it, right? So I have a window of about 2 to 4 weeks. I could, if I had the time, to try to do something grand for the society, economy as a whole, but I'm just a narrow-minded, money-focused banker. I don't want to lose my mandate to the next banker. So go with what's been done before. So that's what happens. It's not that Hong Kong SPVs could not be done. Clearly, Mike from HKMC has demonstrated can be done, no problem. But lowly banker, competitive banking will then just go with whatever has been done. And like James said, without uncertainty.
And I think, obviously, none of us have been involved in the deal you mentioned, Susie. I suspect they went to a huge amount of effort to be able to get it to work. And I think it's really good that they did get it to work because it shows it could be done. But in terms of the amount of effort that was needed, that's something that would need to be thought about. And if we can make clarifications to make it far simpler, just so we can know with certainty it can be done, I think that's what's really going to be helpful.
John?
Yeah. And I suspect on the tax side, the key issue is really the payments out to investors, the interest that you pay out. And, the interest deduction rules that we have, they do allow for deductions where you've issued the debt security in Hong Kong or a major financial center. And there is a list of those, or you've offered the security to the market in one of those centers. Now, if it's issued, it's clear, but what is offering it to the market? And of course, what you do is to get that certainty that you get the deduction, because the last thing you need is all the money coming in as taxed and none of the money going out as deductible, because that basically eliminates the investor's return. You go get a ruling from our friends at the IRD, and there's 3 to 6 months delay in the process. So it can be done, but like I say, there's a lot of uncertainty in there.
Okay. Now, I just summarize very briefly because we still have a number of questions and then we have to go to Jian. Correct me if I'm wrong, okay? My understanding is that if you want to develop Hong Kong as a hub, not just a one-off deal, okay? That is why it's doable. You can, what I call navigate around, okay? And there's something, and then you could even to an extent get tax ruling, advanced tax ruling from the IRD, okay? I suppose it's fair to say that, with a well-established company like the HKMC, and with, what they are doing, which is quite innovative, the IRD, like everybody else, they would look at it, and then, calculate and all that. So whatever, it is deal specific. What happened to the HKMC doesn't mean that, you can ignore what I call just now the wrinkles we need to be tweaked, because if those ambiguities are not addressed, like what James, Kaisen, and John said, you have to look at each deal, each one, when it comes in, you got to wait and assess it. Now, when you hub, that is something is to be avoided. Things should come out like cookie cutter, do it done. That's the way how things should be. So therefore, if we have to do, so I would say that, would it be right that in the interim, if we are going to do the things, okay, we could draw comfort to extend from the HKMC deal and the advanced tax ruling. But at the same time, I think we should continue to just, get it fixed so that we have not just, we not just a center for doing things, but we have a robust legal and regulatory system, so that when people come, the advisors come, they don't even have to think twice. They say, yeah, that's fine, you can do it. So right now, this is what I call the interim. We may have to live with that. And to a certain extent, the three other lesser important legislation that James referred to, the money lenders ordinance and all that, I suppose to an extent we could seek accommodation from the regulators. Right. I say that from experience because when I was at HKMC back in 2002, there was some kind of difficulties because again, we would rely on the company's ordinance. There was a lot of difficulties and all that. So in the end, we spoke to the SFC, okay, and the then financial secretary, I think was Stephen Ip, he asked SFC to adopt some quick fixes. They adopted the quick fixes within 3 months, and then took about 2.5 years to amend the company's ordinance, which he finally did it back in 2005. All right. So I think this is what the situation is for the time being. So hence, work still needs to be done, to get it right. Right. I got 2 more questions left, for my panel here before I go to Jian. Now, what are the main points of friction with mainland regulation if we want to use a Hong Kong SPV, James?
Sure. So there's a handful of points of friction, and indeed in the APSA report that you showed at the start, we go through quite a lot of them. I'm just going to flag 3 of them, which are probably the 3 main ones. The first one is the way you connect, and I'm very much talking about mainland securitization, how we make that accessible internationally. One of them is the way you connect a civil law system, like mainland China, with a common law system, where common law is the usual law that underpins a lot of international finance. And there's actually already a channel in place at the moment between China and the outside world through Bond Connect, which connects through Hong Kong, takes advantage of the common law legal system in Hong Kong to connect the civil law mainland markets with the common law external markets. However, at the moment, any kind of SPV would not be eligible to be a member of Bond Connect. The rules around who can be a member of Bond Connect and hold one of these mainland bonds wouldn't permit that. So that's one thing that needs to be adjusted. Another thing is withholding tax in VAT rules. So when you make a cross-border payment out of China at the moment, there are some exemptions which say you don't have to pay withholding tax or VAT. But there's been a big question mark in the market since around 2018 over does it actually apply to securitizations issued through Bond Connect. That's the second thing that will need to be clarified. And then the third thing I would call doubling up of rules. There is a domestic Chinese securitization system. They have their domestic rules you have to follow when you do that. If we then take those bonds offshore and do an offshore deal with a Hong Kong SPV, the Hong Kong SPV would have to comply with whatever international rules are relevant. For instance, if you had a US investor, you'd have to comply with US rules. And you get this problem of double compliance. You have to comply with the Chinese rules and you have to comply with the international rules. And they don't necessarily overlap neatly. And you might end up doing one thing locally and one thing internationally to protect the same interest. You're doubling up a lot of the stuff you're doing. So if we're able to disapply some of the doubling up, that would also be something that's very helpful.
Yeah, because of the essence of a hub, it's got to be efficient, cost effective, and also timely. It shouldn't have to take forever and a day, okay? All right, one question, the last question I like to put to Kaisen, how does the Hong Kong SPV regime relate to renminbi internationalization?
Sure. Hong Kong has been the clear #1 leader in offshore renminbi. We have the largest pool of offshore renminbi deposits. Problem, there aren't that many interesting offshore renminbi investment opportunities, in particular, those with any kind of decent yield. So if I look at the CMU data last year, we had about $40 billion of renminbi denominated bonds issued and cleared in Hong Kong, new bonds. Most of them were by governments, public sector entities, large banks with very, very low yield. So not very interesting at all. So through the Hong Kong SPV regime that James talked about, Hong Kong could become a one-stop shop for offshore investors to deploy their offshore renminbi. Without having to register themselves as Bond Connect member, they could access through the HKSPV regime, the entire China securitization market. Market size about $300 billion annual new issuance. In Hong Kong, by purchasing debt securities issued by Hong Kong SPV, subject to Hong Kong laws, Hong Kong rules, Hong Kong courts, listed, cleared, all in Hong Kong. And of course, they could get all the professional services from lawyers, accountants, tax advisors they need to support. But it's not really just the size that they are getting. Of course, they're getting that. With the China securitization market, 82% are corporate originators from different industry, different segments. And more of them are willing to offer not only the senior class, but sometimes the mezzanine as well as the most junior class with much more interesting yield. So this translates into much more interesting investment opportunities for the offshore investors. Our last point, some investors offshore want to buy into China, but not ready to buy in renminbi yet. That's again where Hong Kong could come in. Hong Kong's second largest FX market, deep liquid market, good. But Hong Kong rules allow the Hong Kong SPV to do the currency hedging within the structure. So the investors, if they want to, we can offer them non-renminbi, and they do not have to do the hedging themselves. So maybe I'll pause there because all these investment opportunities translates into much more exciting for the investor, and which is an important step for renminbi internationalization.
Now, because securitization, although frankly speaking, I don't think it's that difficult, but it's a bit complex in the sense that many different modules. So if you are a little kind of puzzled after listening to the discussion we just have had, please, this is quite normal, right? Because it does take time to understand. It does take time, okay? But once I can tell you that, if after you have listened to what Chen Jian has got to say about this renewable energy financing, the size and the magnitude and all that, which offers a great potential, and opportunities, for the Hong Kong bond market to grow, okay? You will be impressed. And you will think that securitization, after all, is not gobbledygook. Okay, so Chen is investment officer of Chilean Renewables Group. At the same time, he's also a professor of Finance at Fudan University. Maybe you can just give a very brief description on what is all this thing about, solar panel, solar energy financing. Jian.
Can we just make sure we got the right slide, please? I'm not sure our clicker's working anymore. Could you move forward, please?
Okay, thank you, Susie. Well, very happy to be here again after 1 month. So I've prepared some slides to basically to demonstrate, what our company do. Our company basically invest in global renewable energy infrastructure, mainly in battery energy storage system. So we have projects, Australia, South Europe, and US and Japan, and also in China, of course. So let me briefly review how big the market is. So basically, this is from the World Economic Forum. So they forecast the renewable energy electricity capacity would increase 10 times over the next 30 years. And the battery storage system will increase almost 100 times over the next 30 years. And the amount of money needed is very sizable. So Bloomberg, they forecast in their different scenario. One is what they call the economic transition scenario, which is actually not so good. It's a 12.6 Celsius temperature increase. Even in that case, we need $120 trillion in the next about 27 years. In a better scenario, which is they call the net zero scenario, it's 1.77 Celsius temperature increase. We need close to $200 trillion invested. So translate that into annual investment. So now I have the amount of money, the global renewable energy investment in last year is merely, well, I would say it's $500 billion, which is not small, but it is still pretty far from what we need to invest. And there's the three different agency forecast. The Bloomberg forecast is close to $1.3 trillion. The ARENA, which is the International Renewable Energy Agency, it's $1.4 trillion. Another one is close to $1.9 trillion. So this market is huge. And basically China is a very significant investor in this market. If you look at the data, China accounts for over 55% of global renewable energy investment. So think about the amount of circularization potential we can bring to Hong Kong. And if we look at globally, what is the overall circularization platform? There is China, they have these so-called renewable energy infrastructure rates. And Japan have infrastructure fund, which is very close to their J rates. And in UK, they have a renewable energy infrastructure fund. However, they all have their, I would say, shortcomings. Basically, for example, in Japan, they do not have close border assets. And in China, they have to rely heavily on the subsidy for the just listed renewable energy rates. I think UK is probably now the best capital markets. And I think since Hong Kong have very close judicial and financial market compared to UK, and it is probably to learn from UK and issue the circularization product with renewable energy infrastructure and the collateral. So I don't know how much time I have, and I don't know whether you still have
maybe
questions.
I ask you one question. Yeah,
Okay.
because I think in the interest of time, some of the attendees may have to leave and return to office. I just want to say that, you talk about all these trillions. Securitization, we talk about millions. At that time, dollars, we thought that it was quite a sizable amount. But when it comes to this renewable energy financing, you don't really see that the word millions. You always goes into trillions. So am I right in thinking? Am I right in thinking, Jian, that, for this kind of very sizable financing requirement, I think the bank loan may to some extent help, but you really need a capital market. Capital market like Frankfurt, London, New York, and all that, with deep pockets and very deep, kind of what do you call that? This capital to finance this kind of deal. So therefore, if maybe before you came here today, you're thinking about, oh, maybe it doesn't concern you. I'm afraid to an extent it does, because climate does concern all of us. And if we're going to make sure that we meet the target by 2030, I think you have to cap the emission. And in the case of China, by 2060, is going to be no COP, right? No.
Yeah.
Yeah. So you need the money. And that is, you need to find ways to finance the transition. And that is what Jian is referring to. So do think about it, because that kind of requirement offers business opportunities for bankers, for lawyers, for accountants, for corporate service providers, for rating agencies, and for real professionals. It's a huge business, huge business. So therefore, I would urge, that people who attended this seminar today do start thinking about it, because it relates also to the climate, our ESG and all that. Okay, so the last word before, because it's 5 minutes past now, Jian, I want to ask you, if you're thinking about, in fact, he was looking at elsewhere, and then I say to Jian, come and look at Hong Kong. We are a very good place for securitization, for financing your renewable energy, products. So what are the attractions you see in Hong Kong? And are there any challenges that you envisage that you might have to overcome, or we overcome together with you?
Sure, thanks, Susie. First of all, I like Hong Kong.
Thank you.
This is the second time I'm coming back during the last 1 month. So what I'm thinking is, Hong Kong, we can probably have different kind of securitization program in Hong Kong. And as James and John mentioned earlier, the problem is basically how do you structure the cash flow, right? So we could have infrastructure loans. We could have infrastructure project finance with equity piece, right? How do we securitize the debt, or should we securitize the debt or the equity, or both? So what I'm proposing is probably we can have 2 different markets. One is for the infrastructure loans. One is for the infrastructure equities. And to make it more attractive, you have to have, this, which mentioned by James, right, the separation of solvency or insolvency. So we have to have, the separate of the entity from the project itself. And I think that's one of the problems with mainland China. They always commingle these 2 things together.
Okay.
And another thing is the tax neutral. And Hong Kong, you have rates, but you don't have infrastructure rates. So I think that need to be addressed. And with those 2 solved, I think, for this big asset pool of renewable energy power plants, we could have securitization for the debt piece, as HKMC have done before. We could also have a similar equity, just like the rates, but we have to make sure that it is legally viable. So that's my proposal to Susie. And if it can be done, maybe we'll come to come to Hong Kong and issue our
Thank you. Qian just mentioned REITs. The REITs, public REITs in China, I just want to say that it's a little different from our REITs in Hong Kong, which is subject to the REITs code, okay? Okay, now, before we close, we can take 1 question, 1 or 2 questions. Anyone? Tony? Oh, sorry, Tony. I do forget you. I wish to invite you here to speak as, no, Tony, because I'm sure lots of people, please do. Take my seat.
I just want to make 1 point.
Yes.
I didn't have time to develop that during my talk. You see, if you look around renminbi right now, there's a lot which is not caught in the SIPS payment system. The reason is that there is bilateral settlement between large buyers and sellers. And the very large bilateral settlements right now are taking place in the Middle East right now with oil sales. Basically, they just settle across books, basically. What has happened is that if Saudi Arabia sell a lot of oil to China, they get paid in renminbi. Now, most of the time, they swap that into US dollars because then they use US dollars to buy other stuff and so on. But what we can do, and in fact, if we do have the product, is to actually sell them product in renminbi. That's one thing. That's one, and they would welcome it because swapping that into US dollars, then they're going back to the old form of investing, and asset allocation nowadays require diversification. It doesn't help the diversification of their portfolio. So renminbi helps. That's number one. Number two is that a lot of the countries now, in fact, wants to wean themselves out of the US dollar in terms of the sovereign issues, national debt. Like Argentina, for example, South Korea, and so on. So in fact, a lot of them could actually issue renminbi national debt. And in fact, one of the suggestions this year at the Development Forum in Beijing is the suggestion that countries in the Belt and Road, in fact, could issue bonds in renminbi. Now, the best place for these issues is actually not London, Frankfurt, but Hong Kong, actually. And Hong Kong does have the infrastructure, which is why we have to build the infrastructure. The third thing which is happening right now is that there is, in fact, a move in the Paris Convention. And in fact, there was just recently a meeting in Paris where Mr. Li Qiang and all the leaders, in fact, have attended for the financing of climate change. And in terms of that, in fact, there are new structures coming ahead. Again, where renminbi could be an important currency, and Hong Kong again plays a role. Finally, in fact, there is a discussion in the Financial Services Board, Financial Stability Board, where you have climate change financial assets, which tends to have much less of a risk premium in them. And in terms of capital risk-based capital ratios in banks, and the Basel Committee have been asked, in fact, to see whether, in fact, they could actually have a smaller risk weight in terms of green financing assets in banks. Now, that actually would help with capital ratios and so on. So these are the four things which are happening, which is why, it's so important, securitization. And finally, technology is driving it. In fact, if you talk about financial assets, nowadays, in due course, I think they will be traded by way of NFTs and by way of tokens and so on, and that actually is a securitized product. It's nothing more than that. So again, all of these trends, in fact, favor securitization.
Thank you. Thank you very much, Tony. I think, in view of the fact that we are running a little late and also to allow people to leave, I will end by saying, first of all, I'd like to thank my panel members and, of course, Tony for wonderful speech, and to my colleagues, to my team members for their work and, the discussions and outputs. Shall we give them a round of applause? Thank you. Now, before you go, I just want to say that, we have a number of professional bodies who are with us today. I would say that, because securitization, renewable energy, all those are the things for the future, like IoT, okay? And something that I think is important for all the professionals to really get a good grasp of the basic understanding. not that difficult. Intellectually, it's nothing really so challenging, but there are bits and bobs. So you do need to take time and be patient. So what we at APSA will do, we will start working with the other organizations, to start some seminars, explain, the nuts and bolts, from the basic as well as some opportunities and as the market, how the market is progressing. And also, of course, in the meantime, we'll be working closely with the government just to explain to them that you have to really address those issues, because not just for securitization, but securitization also for the renewable energy, huge sums of money. Okay, that's one. The other thing is that, I'd like to take this opportunity to thank my team members. In particular, Maria is not here today, right? Oh, Maria, yes. Maria, really, really hardworking lady. And Kaisen and Agnes, Agnes Chen, our admin coordinator, for the hard work. They have worked very hard, very late, because we don't have a huge team of people. And of course, not forgetting KPMG, Mary Lau, Chris Lam. Chris, where are you? And the other, and his team members. They've been excellent. They've been supporting us. And also, of course, to KPMG, who is the venue sponsor. They kindly, let us use it so that we have a comfortable venue, to discuss matters with you. And then last but not least, if you find what we have been discussing today interesting, please do consider joining APSA as a member. Individual membership is only $800 a year, not a month. And then for the corporate, it's $6,000. We are slightly more because as a small professional association, we do rely on corporate membership to support some of our activities. That said, we are very self-respecting. We hardly spend much money. And John knows that because there's nothing very much on the expenditure item. Okay, and if some of you missed this program, today's session, and if you want to read it again, repeat it, especially in the case of Tony, which I'm going to look at the video again. Kingsley is going to upload today's video of the video recording of this event on our APSA website after 5 o'clock. So please, you can go and do that. And with that, I think that's all I want to say. Until then, I hope to see you next time again. Okay, very soon. Au revoir. Au revoir. That means I'm just saying that to see you soon, but not goodbye. Thank you. Thank you very much. And thank you.
First reading. If I may just add, then I'm sure you need to get a good